Vice President Yemi Osinbajo, Microsoft President, announced digital plan that will upskill 5 million Nigerians, ensure internet connectivity and infrastructure. Federal government offers May 2021 savings bond. The IMF urges Nigeria, others to take more loans for quick recovery from COVID-19 impacts. And Brent crude rises 6 cents. This is Business Express, and we're reaching you live from Abuja, Nigeria's capital. I am Liakatun Babatunde. Microsoft is making moves to collaborate with the Nigerian government to accelerate digital transformation in the country. The technology giant, in a joint statement with the federal government, has detailed several projects aimed at intensifying the nation's move to become a more digital economy. After extensive consultations with the government, Microsoft identified 3 key pillars that will help to build strong foundations for a digital economy in Nigeria: connectivity, skilling and digital transformation. Vice President Yemi Osinbajo says much needs to be done to empower all citizens to take advantage of the opportunities of our digital economy, and he added that Microsoft's Airband initiative has succeeded in bringing high-speed internet connectivity to underserved communities around the world, tapping into the unused broadcasting frequencies of the television white space. The technology is cheaper and faster to deploy than fiber and has the added benefit of being able to travel long distances and through forest terrain.
Few years. In 2018, we partnered with tech experts to create a customer support center, a center that in Lagos already employs more than 1,600 people.
And will help us deal with unemployment problems made worse by the pandemic. In the area of digital transformation, we will pioneer innovative approaches in the fight against corruption, a major priority of this administration. Leveraging Microsoft's technology tools, which can be deployed to minimize governance risks and block loopholes, working with the Economic and Financial Crimes Commission, the EFCC, we will seek to use cutting-edge analytical and case management tools to plug holes in our public sector system.
The federal government says it hopes to create over 27,000 new digital jobs in the next 3 years. With nearly 90 million people projected to fall into extreme poverty from the impact of COVID-19 in 2020, the International Monetary Fund has implored governments of developing countries to scale up policies and strategies for economic recovery as nations ramp up vaccine production.
Governments should gradually scale back support programs and scale up targeted hiring subsidies and retraining and reskilling. This is particularly important for low-skilled workers, youth, and women who have borne the brunt of the crisis. Viable small businesses need more help through equity injections and better restructuring procedures.
And in other business developments, the Debt Management Office DMO, on behalf of the federal government of Nigeria, has offered for subscription May 2021 savings bond. It offered 2-year savings bond due May 12, 2023 at 7.753% per annum and 3-year saving bonds due May 12, 2024 at 8.753% per annum. Opening dates for the bonds is May 3, 2021 to close May 7, 2021, while settlement date is May 12, 2021. The impact of the virus on businesses globally has opened up new frontiers for smart entrepreneurs who spot business opportunities amid obvious challenges. Kelvin Samuel in this report takes a look at point of sale POS business, the challenges as well as acceptability by the people.
The 21st century, which is considered to be a digital age, has numerous inventions to its credit, most of which are aimed at making life better by enhancing delivery of goods and services in a way that saves time and energy. One of such inventions can be seen in the financial sector, where point-of-sale system, popularly known as POS, are used in carrying out several financial transactions. This portable device enables easy and secure financial transactions in the absence of cash at a point of purchase. This method of transaction, which is unarguably taking many youths off the street, is gradually dominating other forms of banking as business operators now find it more convenient and time-saving.
Very, very good. Farmers, they like it. Traders, they like it. Businessmen, they like it. Where there is no network, sometimes you have a little challenge. But
in the lockdown, we find it so difficult to enter bank. Then we just get in here and get our money. But
the advantage is you can collect money wherever you are, where there is no bank.
Transaction is declined. Like now we have transaction decline. Like on this, you as a spin, there are some that will show you pin tries exceeded or
like the other day, I used POS. The money was transferred, but the people that are the architects of the whole thing didn't collect the alert, but I was debited.
The people are optimistic that if properly regulated to ensure adequate security and funding.
Thank you, Kelvin. Oil prices extended gains on Tuesday as more U.S. states eased lockdowns and the European Union seek to attract travelers, helping to offset concerns over fuel demand in India as COVID-19 cases rise. Brent crude futures rose 6 cents or 0.1% to $67.62 a barrel after climbing 1.2% on Monday. U.S. West Texas Intermediate crude futures also ticked 5 cents or 0.1% higher to $64.54 a barrel after gaining 1.4% on Monday. Analysts say prices are being supported by the prospects of a pickup in fuel demand in the United States and Europe, as New York State, the New Jersey, and Connecticut were set to ease pandemic curbs, and the European Union plans to open up to more foreign visitors who have been vaccinated. And on that note, let's look at price of oil and other commodities on the global market this morning. Businesses, households, and in fact, the whole economy is still feeling the impact of the coronavirus pandemic as policymakers ramp up efforts to find an easy way out. Nigeria has recorded a steady rise in inflation, eroding gains made before the pandemic, unfortunately. To take a look at investments and the impact of inflation on the economy is an expert, Dr. Tefa Abraham, our in-house economist, I dare to say. You're welcome to the program.
Thank you for having me.
Okay, great. So I would like you to start with telling us the cost of virtually everything is up. Food, in fact, it's at about 20%, just the highest in a very, very long while. What are the driving forces?
Great. The driving forces for this rise in general prices is the food component of inflation. But again, increase in price is not the shocker for economists. The shocker is sustained increase in prices. That's what leads to what is called inflation. But price jumping up can be normal sometimes because of the interaction or oscillation between demand and supply curves for any specific commodity or services. So price could increase. But when that price keeps increasing, that is when it becomes a concern for inflation. Because the way it works generally, because of the insecurity we have, the food component of inflation on its own is over 22%, while the general inflation calculated for as at March is about 18%. So you can see that the food component of inflation is higher than the general year-on-year inflation rate. So that is a clear signal that the food component is what is driving the increase in general prices as we define in inflation. What I'd like to say there quickly is that inflation in itself can be good or bad. So the increase in price, like I said earlier, is normal for businesses to make profits. But when it becomes unsustainable, so you buy something on Monday for 100 naira, by Tuesday it has become 140, by Saturday it has become 180. That is where the concern is. But if a commodity goes up from 100 naira on Monday to 110 the next week and remains like that for a long time, CBN will be said to have kept prices low. But that does not mean, again, that deflation is good. Deflation means as prices go down suddenly, what happens is that people will expect the price to go down further, and that they halt their consumption decision, and production becomes affected. Those who are employed in that sector also have experienced a contraction in job. So the target for the CBN is to keep prices, general prices, stable. So even though they increase, the target will be keeping it like that for a very long period of time, and our monetary policy is always effective in that direction. But for now, the challenge we have is the food component driving inflation, and also to some extent the transport component. And what it takes to tame that component of food has to do with tackling insecurity, rural food production, and rural farm market value chain.
Okay, so how is this shaping the economy as a whole?
General inflation punches the economy through increasing cost of living. It reduces the value of money people have. You find out that 2 weeks ago, 200 naira can do a lot, but because of inflation, 2 weeks later, 200 naira can only do what 90 naira can do. So what you have in that context is that the real wage of people becomes small in the face of the real market. So you have people clamoring for increase in wages. Across unions, you find strike happening.
Like we have now.
Exactly. Exactly. Then even all government programs that, for example, like the one the Vice President talked about with Microsoft, looking forward to create a lot of jobs through the Microsoft interaction and the digital space, the landing cost component of everything we're importing to fuel those kind of projects will increase. Then again, the landing cost of the portion of oil that we import, whether refined or oil refined, will also increase. And once because of inflation and the importation of international inflation component, you find landing cost of oil changing. So even people in the oil market will find it difficult to model. So you keep hearing subsidy today, no subsidy today, rumors of strike or no strike, pengasi or no pengasi. All that thing is uncertainty that inflation brings. But for the CBN, the target is keeping it stable so that it will reduce the effect of cost push inflation or increase in general prices, especially in areas that are expected to be very stable.
Okay, now still speaking the economics of the economy and the investments, we've seen, as you've rightly pointed out, injection of funds and all sort of programs aimed at what? Lifting people out of poverty. We have a growing number of poor people, and then of course we have inflation again on the other hand. How do we marry these dynamics?
General inflation has an impact on savings and investment identity. National savings generally is from public sector savings plus private sector savings. Public sector savings is from government. And how do you measure public sector savings? When tax revenue is higher than public spending, you can say that the country is saving. But when tax revenue is less than public sector spending, then the country's public sector is certainly deceiving. And for a long period of time, Nigeria's share of tax revenue has oscillated around 20%. And that shows that for a significant period of time, we've been deceiving publicly. But the other component of the national savings identity is private savings, which we get from household savings and business savings. But because of the increase in inflation, which is about 18%, and the current rate of monetary policy rate, which is about 11.something%, market people will price that cost of funds on people borrowing, on private sector borrowing and small business borrowing. So by the time you add inflation and monetary policy rate, you have businesses, individuals borrowing for businesses, paying interest of about 30%, including cost of fund administration. So this is how this thing affects even investment decisions by firms. And if you hear what the IMF is talking about now, they are pushing for government discontinuing pumping funds into social investment program, because IMF is part of the Bretton Woods institution, as I always say, and the interaction is the way they think is market-driven economics. So when you push a lot of funds for social investment, they are wondering how long it will take to begin to reap back profits. But when you refocus or reprogram your attention to supporting small businesses through subsidies, they believe that it will take a shorter term for those businesses to begin to make profit, employ people, and then help solve unemployment and poverty problems. So general inflation is the reason for all this switch in focus on social investment program and reprogramming effort to focus on supporting small-scale businesses. But as a poor country, or as a country struggling with poverty like many other developing countries, especially in this period of COVID-19, what is needed is supporting social investment program. But the market of that, the implementation of it, has not been so pleasant to be able to track how many people have benefited and how many people have been pulled out of poverty. So it seems like supporting small businesses through subsidies and those kind of intervention will make more sense in the market sense.
Okay, while we try to support these small businesses, we've also had the AFCFTA in place. How would Nigeria compete favorably with her partners when we're investing money that actually the fundamentals are not in our favor? Is it happening in other economies on the continent?
Well, generally, inflation is part of those fundamentals. Real GDP and some other macroeconomic indices are part of those fundamentals. We are still in the African Continental Free Trade Agreement, but unsustainable rise in inflation, just uncontrollable rise in inflation, this unfavorable position of all these macroeconomic indices will simply mean that we may not be able to benefit as we have imagined in all these continental free trade agreements. It doesn't mean that joining it is bad or good. That's not my argument. My argument is that to be able to make our own export and business or what we are selling competitive, if inflation is not low or stable for a long period of time, there's no how our goods will be competitive relative to that of other countries. The way we want Ghana or South Africa to come into our country and buy our own goods is the same way free trade idea wants us to also buy their own goods. So in a way, there's no trade war in a free trade agreement. You want to buy freely and sell freely. But what determines the selling or buying power is how competitive your own exports or commodities or services are. And inflation does not make us look really nice. So I know very well that the CBN right now is doing all they can, both the ones we know and the ones we don't know.
In fact, I was going to ask you before I let you go, the policy direction you think should be taken to assuage these concerns.
What we have seen the CBN done recently, because right now the global economy is facing an unconventional economic crisis. So we need more of unconventional monetary policies. And you see the CBN doing its best to dish out all those policies every day as much as they can. But what is critical is keeping prices stable. CBN may not be able to take inflation down, but keeping it stable for a long time, this 18%, keeping it like that for a long period of time would be a very good achievement. So we might just be in a period where we'll find our economy growing, but inflation just remain high relatively the way it is. So we must be able to tolerate some level of inflation to achieve the needed growth that we need. So let's allow CBN the latitude to do what they need to do, both the ones we know and the ones we don't know.
Thank you, Dr. Tefa.
Thank you so much
for this coming on the program. Now, on our Surviving COVID-19 series today is an employer of labor who, despite challenges posed by COVID-19 pandemic, believes that the end is in sight as businesses seek support to rebuild. Musa Abubakar has that report.
Surviving COVID-19 series is brought to you in partnership with the Central Bank of Nigeria.
Business is gradually picking up for Yakubu Yahaya, a satellite TV agent. The COVID-19 pandemic has not been particularly favorable. Like many businesses, the lockdown forced him to close down. He had to rely on his little savings. Yakubu's staff were disengaged for the period of the lockdown. He still maintains them as demand for his services is gradually peaking.
Gaskiya ina da akalla mutane suka kusan kaman guda 5 haka a ƙasa na wanda kuma duk suna samun dan abinci da ƙarƙashi na dukansu.
He said the federal government COVID-19 survival fund will help his business.
Gaskiya na yi apply tun daga irin form da ake kawo mana mu cika in tura da dai wanda nake har ta waya wasu ma tun da na gaskiya da waye da na ce mana ce ne ba wanda ban gaskiya ba mu samu wani loan ba a halin yanzu.
He is hopeful that things will get better.
Surviving COVID-19 series is brought to you in partnership with the Central Bank of Nigeria.
Financial markets resumed this morning in Nigeria, and as major economies around the world reopened this Tuesday, Asian shares were mostly positive as investors looked to signs of recovery from the coronavirus pandemic. Boss Able has Global Market Watch.
Stocks in Asia Pacific were mixed on Tuesday, with major markets in Japan and China still closed for holidays, while Hong Kong's Hang Seng Index rose 0.66% as of its final hour of trading. Investors also continued to monitor the COVID-19 situation in India as it shows little signs of slowing down. The World Health Organization said last week that 1 in every 3 new coronavirus cases globally is being reported in India. European stocks advanced on Tuesday morning as investors monitored global recovery prospects and a fresh round of corporate earnings. The pan-European stock 600 added 0.4% in early trade, with basic resources climbing 1.4% to lead gains as all sectors and major bourses entered positive territory. DAX rose 0.03%, FTSE 0.75%, and CAC 40 0.36%. Meanwhile, U.S. stock futures were flat in pre-market trading on Tuesday after a strong start to May as investors piled into shares that would benefit the most from an economic reopening. Futures on the Dow Jones Industrial Average shed 46 points. S&P 500 futures and Nasdaq 100 futures both traded in negative territory. For Africa stocks, Namibia's overall index and South Africa's JSE Africa Top 40 opened positive, while other stocks are yet to post figures as at the time of this report. Boss Able, Business Express.
And before we go, a look at the currency market as the dollar drifted higher in the Asian session on Tuesday, and generally the dollar finds its footing. And that's it on this edition of Business Express. Remember to keep in touch with us by sending in your comments, observations, and suggestions, as well as your questions. Our Twitter handle, don't forget to catch up with us. It is NTA News. Now the hashtag is BizExp. Also be informed that all previous episodes are available, including this one, on the NTA's YouTube channel. You can also keep reaching out to us in every other social media platform, including Facebook. Join us again Wednesday at 3 p.m. I'm Liakatun Babatunde.